If the US Latino market were an independent country, it would be the fifth largest economy in the world, larger than any other LATAM country and even larger than India and the UK. It would also be the third fastest growing country in the world. So they would be lagging behind China and India, but actually be growing faster than the US. And so, in other words, Latinos are primarily driving most of the growth in the United States. And if you don't have a Latino strategy in the US, you don't have a growth strategy.
There are nearly 5 million Latino-owned businesses in the US, and nearly 1 in 4 new businesses are started by Latinos. And yet, access to banks and financial products is not as easily available for these entrepreneurs. Sean Salas decided to change that by co-founding Camino Financial. Through technology and AI, Camino offers affordable loans to satisfy the demand for credit that rises up to $20 billion from Latino micro and small businesses. Camino has raised over $150 million of debt and equity funding, and in 2023, they merged with Fundation, an SMB tech-enabled lender that specializes in bank channel partnerships. Today, Sean and I talked about the Latino market in the US and the challenges it faces, how the business model of Camino allows them to serve micro businesses, and the lessons he has learned on company building and fulfilling his vision. This was a fascinating episode because a lot of people talk about the opportunity to serve the Latino market in the US, but it's not as simple as it sounds to do so. And Sean knows that well. So I hope you enjoy my conversation with Sean Salas of Camino Financial. Hi, Sean. Welcome to the podcast.
It's a pleasure to be here.
Awesome. Excited to chat. There's a lot of interesting stuff to learn about what you've done so far in the world of business. And I want to start with something that's we have in common, which is our Latino background. You have a unique vantage point on let's say the state of the Latino demographic in the US, because through Camino, you've served Latino business owners. And people are increasingly talking about how it's the fastest growing population in the US, how entrepreneurial they are, how hardworking they are, and so on. Can you describe for us like the state of the Latino market in the US today for those that don't follow that market as closely as you?
Absolutely. And once again, it's a pleasure to be here, and always happy to start with the power of the US Latino market. And so the latest stats that have been published are stats as of 2021. There's always a bit of a lag on the publishing of these stats. But if we were to measure the US Latino market as its own country, measured by GDP, the US Latino market generates $3.2 trillion in GDP and grew 14% year over year relative to the prior year. So let's contextualize that, because I think that's really important, right? That would mean that if the US Latino market were an independent country, it would be the fifth largest economy in the world, larger than any other LATAM country and even larger than India and the UK. It would also be the third fastest growing country in the world. So they would be lagging behind China and India, but actually be growing faster than the US. And so if you double click on just the United States, it's very interesting, because the US Latino market relative to the non-Latino market grew in 2021 2 times faster than the non-Latino cohort. So in other words, Latinos are primarily driving most of the growth in the United States. And if you don't have a Latino strategy in the US, you don't have a growth strategy, just purely based on these macro numbers. And so it's a great market to be focused on, to be investing in, to have a perspective on. And then, the more you double click on consumer behavior, on small business behavior, and peel back the onion further, you see the gem that this market is.
I always remember hearing Roman Leal from Leap Global Partners. I think you might know him on a panel, and he said that the Latino US market is the most underlooked or overlooked emerging market in the world. I
Mhm.
love that description, and leveraging the fact that you have an investor background. I think the obvious question is, why does it make sense to look at this market as a country itself? Like what is so unique, and you think people that might not be so familiar to it have to understand to, build a business, to design a strategy towards this market?
Yeah, I think there are pros and benefits of framing it as a country. I think the pro of framing it as a country is it's very digestible and benchmarkable for investors to really qualify and quantify the this segment in the market. So I think that's great. I think makes it very tangible and easy to communicate. But it also on the con side could be a bit misleading because makes people believe that this market is very homogenous, right? And all Latinos are made equal, right? You are Peruvian, I'm Mexican American, right? I think there's Spanish speakers, there's non-Spanish speakers, there's second, third generation, fourth plus generation Latinos that have different behaviors and affinities. And so, from that perspective, I think it's not a homogenous market. It's actually incredibly diverse in and of itself. But I think there are some commonalities that do cut through the market that create niche opportunities that actually on a standalone basis translate to very large TAMs or total addressable market opportunities. So I think there's pros and cons to framing it as a country. And so it's important that we communicate the opportunity appropriately, especially when you measure the amount of venture capital that's going in to the US Latino market relative to the LATAM market. And there's some good reasons why, once again, back to how homogenous one market is relative to the other, why there are nuances, but it's still, relatively speaking, grossly undercapitalized, grossly overlooked, and a big market opportunity for those that know how to tackle it.
So speaking of the cons and those nuances, I would love to tie them to the fact that it's a, as you were saying, underfunded market. What would you say are those, I don't know, if two or three probably big misconceptions about the market, or probably even risks that investors or entrepreneurs see trying to basically target this market and isn't allowing them to basically capture that opportunity, as you did obviously through Camino?
And I'm going to share some hopefully very valuable insights on the market opportunity and be as balanced as I possibly can be at the expense of being maybe a little controversial. The top line TAM in terms of volume and opportunity and GDP is there. I see it every day. But at the end of the day, when we try to break this opportunity down to where the money can be made in the funnel, I think that's where the rubber hits the road. And so, take credit, for instance. I think credit is a very good example of how to really drive and qualify the market opportunity and really just gauge what you're getting yourself into, which is a great opportunity, but also what core competencies you probably should have and specialize in order to tackle it efficiently. Back to the point, not just in venture, but in debt in particular, there is a huge surge in entrepreneurship in this market. It's growing over 50% of the net growth in small businesses comes from Latino owned businesses, as an example, for instance. It's summing over 4 million small business owners in the US. That's more business owners than there are in Mexico. And so that's a very interesting top line opportunity. Back to big TAM, big opportunity. Now let's funnel it down to its parts, right? By and large, Latino owned businesses, and this is a reflection of the Latino market and other verticals too, where they're a lot smaller than the average non Latino business. They generate on average $200,000 in revenue per year. The average non Latino owned, or the average business in the US generates $600,000. So even on average, the non Latino owned businesses are even larger. They tend to be earlier stage, younger. And so, from a credit perspective, that actually filters out a lot of the opportunity in terms of what we can call the total addressable market versus the qualified market opportunity. And the smaller you are, the earlier stage you are, the riskier you are. And so that also translates to risk tolerance, pricing capability to kind of price for that risk while still manage a business and do well and do good at the same time, which is incredibly important. It's hard to do. So it's great to say, hey, here's a big market opportunity, but when you break it down to its parts and then measure it based on the qualified opportunity and the core competencies that you need to develop and the scale of that opportunity relative to the infrastructure you need to build around it, it starts becoming a trickier business, right? I think there's another element of it, which I'll repeat, is this is not a homogenous market. I think there is probably a lot of common elements and characteristics and affinity orientations for your first generation Latino, even your second generation Latino. But then as you start gravitating beyond that generation, you're seeing a deviation in behavior, right? And language preference. And it is also generational. Like the younger Latinos want to speak Spanish, they embrace their Latinidad, right? My name is Sean Derek. I have an Irish Catholic name. I'm not, I have a beautiful caramel skin. I'm not Asian. I'm not Catholic. I'm not Irish. I am Catholic. And so the point is, and I was caught in a generation where there's a big push to simulate and speak English before you speak Spanish, and that's changing. So there's also those changing trends that also translate to the change in behavior. And so I always challenge people a little bit. I'm like, I think you should have a Latino strategy. I don't necessarily think you should have a Latino only business unless it makes sense. And that's the challenge I give a lot of entrepreneurs and investors that come to me because, obviously I've specialized in the space, and I would say probably 80% of the time, it probably makes more sense to have a Latino strategy within your organization than a Latino only orientation.
I love that, and that's a huge insight. I think this begs the obvious question of when it makes sense to have a Latino only focused business.
Yeah, I mean, this is kind of where I'm being a little controversial.
Yeah.
Like, talk to the guy that's a Latino only oriented business, right?
Exactly.
And telling you, hey, it could make sense. I'm not saying it can't. You have to have a good reason for it. I actually do think it makes sense in Latino small business credit up to a certain scale. And we just merged with the company to actually accelerate that scale based on the learnings that we built within the Latino market. So our 0 to 1 strategy, now 1 to billion, right? But there is merit in Latino only businesses. There's whether it scales up to the venture backable $1 billion plus valuation or not, maybe not. I would probably be skeptical that it does on a standalone basis, but I actually think it makes a ton of sense to incubate businesses within the US Latino market and then scale them up into adjacent markets and segments that have similar characteristics around credit and access to credit and underwriting and informality of the market itself and so forth, that I think did translate beautifully with Camino Financial. But at the same time, I'm saying that's probably 20% of the time. The other 80% of the time, where most of the value at the billions and billions of dollars, really capturing the 1.2, 1.3 trillion, $1.5 trillion consumer buying power. Who's actually capitalizing on that? Is it the Latino only businesses? No. It's it's Procter and Gamble, it's Walmart, it's Pepsi, right? Flaming Hot Cheetos, right? Like that's where the value creation is. And so for people that may be listening to this podcast, right? I'm sure there's entrepreneurs like, do I have Latino only or not? I just ask you to be very skeptical about to what level does that scale. It may be a good entry point differentiator, but be real with yourself and how you're going to stage the business for massive scale if that's your path, right? Maybe you don't have venture backed company, you want to be a cash flow small business that's generating $5 million in EBITDA a year. Hey, that's a great business. I think there's a lot of Latino verticals in there. For venture backable companies, I would be probably a bit more skeptical. But then for those people that aren't necessarily in the Latino market, right? I would challenge you at the same time as well. Why don't you have a Latino strategy? How can you be growing, really truly growing, if you don't have a Latino strategy? Because look at the case studies of very large companies that develop a Latino strategy and how successful they are. And those companies, because they know where the growth is.
I love this. This is huge insight from your experience. So I wonder, as you consider, I mean, obviously, right now you're not operating Camino, but as you guys were considering the next phase of growth, how did you weigh in the pros of cons of this initial focus on the Latino demographic? Like, I wonder, I mean, speaking of these entrepreneurs that might be thinking, okay, should I start targeting Latinos? What are those trade-offs that they should be aware of when designing that strategy?
This is how I challenge people that want to do Latino only or Latino first strategies, which is okay, what are the beyond branding, language, marketing
Mm-hmm.
stuff, right? Which
Which is the
everyone kind
most
of,
visible.
the most visible stuff. What are the structural inefficiencies and why incumbents are not addressing this market well? And what are the structural solutions that you're bringing into the market that would be very hard for an incumbent to replicate? And I double click on that because it's really important. So, in the context of Camino, let me use that framework and apply it to Camino. And I
Perfect.
actually
Yeah.
think
Mm-hmm.
I equate it, I make an analogy with why Latino only oriented supermarkets exist and while I'm still a very avid customer of them. And so there's a supermarket called Vallarta that's down the street from where I live. So I have Vallarta. It appeals to my affinity, my background. It's located in my neighborhood. Great. I walk in right to the store, and now I'm seeing ingredients that I want access to at a lower price than I otherwise would be able to access them. So it's not just tortillas. Everyone has tortillas, pero like lengua, certain chilies that I love to make my mole with, right? That you probably couldn't get at the same price point. So there's an inventory consideration, but then there's a supply chain element of it because you're moving certain inventory at scale in order to do it efficiently, right? Then you go to the cash register and you speak to someone that speaks in your preferred language that's honoring your background, you feel comfortable, which inherently creates loyalty, right? At a price point that's accessible. And so you become loyal to it. Now, let me give you the analogy, same analogy for Camino Financial. Okay. So Camino Financial, where our insight is we did believe and continue to believe that building a brand around the Latino small business owner that we were able to validate did not feel was being heard in the credit space was valuable. We paired that insight with location, which was we everyone told us when we started this is a segment that wants to exclusively work offline. They need to see you, touch you. There's distrust in transacting exclusively online. So we did a digital only strategy, not just in branding and positioning, but also transacting everything from, we need to integrate directly into your bank account and we won't take PDFs and so forth, which everyone said with first generation Latinos, Spanish speaking people that I
They're crazy.
into the United States, they'll never do that. Not true. So there was a counterintuitive positioning and marketing that we did that actually worked to our benefit. And then going to the ingredients and the supply chain value, right? So for us, it's that's underwriting. That's underwriting and pairing the right underwriting with the appropriate price and the capital market strategy that really is comfortable with this credit profile that would otherwise in a different organization talk to how you compare that to incumbents. These are thin file, no file credit profiles or cash heavy businesses. They tend to be smaller. So all those flag high risk to an incumbent lender. But because we're able to specialize in this segment opportunity and build large data sets on that, it gave us a point of differentiation that gave us a price advantage relative to incumbents. And then, of course, as you close and build loyalty with your client, you offer a great customer servicing experience that enables people to come to you for anything that they need and eventually build other products and services around that experience. So it's a perfect analogy of how you think about it with real structural nuances, right? In our case, underwriting, pricing, and capital markets right? Along with the beautiful, with the digital positioning and branding experience and great customer service that really gave us an advantage.
I love this insight that you guys had around underwriting, and I want to go there in a few minutes. Or because the deepest understanding that you had was the nature of these Latino-owned businesses, the fact that they, as you mentioned before, generated considerably less revenue compared to businesses owned by other demographics. And I wonder why. Clearly, access to financing is a major barrier to the growth of these businesses. But it's certainly not the only one. Education might be another part, which I know you guys have done a lot in that regard through your content marketing strategy. But let's say I force you tomorrow to start a new company serving the Latino business owners. What are specific problems you would address that you weren't able to address with Camino? Like, what prevents these businesses from growing besides just funding that keep you awake at night?
So we did have a founding principle at Camino Financial that I think we tried to do a good job doing, but I think there was room for improvement. The founding principle was capital in isolation is not the solution. I'll repeat that again. Capital in isolation is not the solution. So if all you do is provide capital and you don't provide any other ability for financial literacy tools, resources in order to empower that business to be better off with the credit that you're giving them, I think that's a missed opportunity, not only to have a better credit profile, but to build a very long term customer base that eventually you want them graduating into a broader suite of products and services that are wealth building in nature. And it doesn't have to be pinned on a loan. So that was a foundational principle at Camino Financial. I actually think we did execute to a certain level well on that, including us becoming a community development financial institution and really building a really great content strategy to farm, but also and activate leads, but also to nurture our client base post close. And so I think that's a huge opportunity. I think probably what I would do differently is I think that the AI and tech stack have evolved since Camino. And I think now, as I think about new opportunities, there has to really be a Gen AI component to it that really enables you to scale not only the offering, the product experience, right, but also how you operate that business. That I think is very exciting. It's a good time to be starting a new company as an entrepreneur. Let me put it that way.
Totally. And I want to double click, like going beyond basically Camino, what you did through credit, what are other areas that you would think would empower these Latino business owners to basically grow and, let's say, close that gap in comparison to the average business that's out there in the US? And I would love to like take this opportunity and as an exercise to how would you think about some of these next business ideas that you have in mind?
So I know where you're getting at, Enzo, but you may not like what you hear. Okay, it's a two-way street. So I'll tell you, we did a lot. We're doing a lot of things, right, to really drive financial literacy and education. Okay, the thing that you may not want to hear as a theme, and this is a principle that actually, interesting enough, Muhammad Yunus and if you guys have read his book Banker to the Poor abides to. I couldn't agree with more. In practice, is that particularly in credit that say this borrower base needs more than credit. Some people call it technical assistance, financial literacy tools, services, and so forth. And in fact, sometimes they tried to force feed them these tools and resources
As
as a
conditions,
condition
exactly.
to getting the as a condition to get the credit. And here's what I have found, and this is a cold hard truth, that that the education piece is like force feeding them broccoli. It's like, and the flan is the capital, right? I'm generalizing here once again, but I do think us, and not, I'm not going to speak in terms of they, we as entrepreneurs want flan sometimes before we eat our broccoli. But we know, I think over time that broccoli is important. But at the same time, I think when you're living particularly as a small business owner, and with very limited bandwidth, extending a value prop anchored on or partially supplemented by education is really hard to do given the dynamic that I just discussed. And so I call it the Broccoli-Flan Paradox. We've tried to create incentive structures for people to have their broccoli, call it chocolate covered broccoli. Those opportunities are still a work in progress. It's not easy. At one point, an evolved entrepreneur actually loves their broccoli, right? They're like, I want to be in the best shape of my life, right? And so there's a positive selection bias of flan versus broccoli and who eats their broccoli. But I can tell you that when you have a mass market opportunity that may be structurally and systematically malnourished, let's just call a spade, right? Like it's really hard to address that problem and opportunity. Back to the nuances of, and this is a structural issue that I do think cuts across the Latino market, by the way.
Totally. Yeah, totally. It starts to get into those areas where problems are not necessarily business opportunities, right? There might be more areas for policy or for the government to have a role. I think usually big problems translate into big markets, but not always. Right? Sometimes there's might be a problem, but not necessarily the willingness to pay for it, and you have to be very wary
Yeah.
of those.
Yeah, look, but just to kind of challenge that point too, because I don't want to discourage people from solving big problems with real return opportunities in the Latino market. I just want them to be aware of
Yeah,
it,
yeah, totally.
that we can create real structural solutions to the problems, right? That's where I'm challenging because people keep it at a high level and I hear it all the time. And I'm like, yeah, but you got to break it down. Give people something to chew on. So you're not just building a business. I would qualify it as you're contributing to an ecosystem. And we'll talk about Camino. I think we need to talk about my role at Camino and how I've evolved. But what I can say is that, you know, I went from startup entrepreneur to ecosystem builder as how I perceive myself. And so one of the things that I'm most proud of what I did at Camino Financial is we became the first fintech community development financial institution at a national scale focused on small business lending. And community development financial institution, you can kind of gauge it from its name. It's a financial institution that is driven by community oriented efforts, right? And by doing that, that gives you an advantage around potential cost of capital, around offering other resources other than capital, to making that broccoli always available. That's for sure. Take it or not, sometimes is the trickier part, right? And then developing a relationship with a broader stakeholder base, right?
Let's move now into Camino, and I want to start with one of your, I think, product insights, which is that the businesses that you serve through Camino are better categorized as micro rather than small businesses, given the size of or the amount of revenue they generate annually. I mean, learning about that, I was wondering, like, are you actually underwriting individuals or actual businesses? And because I'm curious where one of your key insights is treating these businesses more like individuals, or let's say households, in contrast to your competitors who may view them strictly as businesses?
The short answer is we look at both. We've always looked at both from day one. We knew that given the micro business nature of the businesses, that you need to see both. I would say probably one of the biggest opportunities still that lie within Camino are seeing them more as individuals than businesses. And here's why. I think this is an interesting stat. So if you look at 96% of registered Latino owned small businesses in the United States, that 4+ million number that I shared with you earlier, 96% are non employer businesses. Okay. So they're not just small, just one woman, one man shop, right?
Solopreneur.
There you go. I'm glad that term is getting so much traction. I'd like to think I have some credit in doing that. But anyway, they're solopreneurs. And when you look at where the growth is in solopreneurs, it's massive. It really is massive. It's exciting. It's really the majority of the Latino market, but also the majority of where the future of employment is going once you now start growing the big line between small business owner and the gig economy. And I think there are gig businesses that define that gray that may not have a registered employee identification number, but psychologically, operationally, they're entrepreneurs, right? I think that that's a very interesting opportunity that skews more towards the individual than the business. But eventually, of course, you want to graduate everyone to being underwritten purely on the basis of their business. But that's a function of scale and stage.
How did that change the type of data that you would guys look at versus, let's say, your more traditional competitors or the other folks that were, in a sense, targeting this market?
I'm a big believer in going deep before you go wide. I think there are a lot of lenders that I know harp on big data and alternative data sets, but they actually really risk rank on the basis of some basic ones. Okay. And like like cash flow and how you manage cash flow. Look, I do think traditional financial statements may not be efficient. So bank transaction data in my mind is probably one of the biggest treasure troves of data out there. And so back to the point on we know what data sets risk rank. And so then specialize and go deep in understanding those data sets so that you can apply methodologies that I think work better in underwriting credit for segments that have thin to no file credit scores, because that's another data set that's important and valuable. But when you have the lack of that data, then you may need to weight more on the cash flow data and apply different methodologies. Just to give you an illustrative example, we do surrogate income underwriting for our borrowers like Camino, which basically means for a variety of reasons, because you're a cash-based business, not everything's flowing through the bank transaction data. And so I'm going to look at the cost elements of your bank transaction data, and from there derive what I believe is the income being generated by the business, right? And that's an example. And then you over time you calibrate that model to really underwrite for affordability. And that's because at the end of the day, you want to underwrite for affordability. And so I think that's very important. And that's where that methodology comes to play.
What I find very fascinating about this, the surrogate income underwriting, which you just described, is that it's a very common practice in emerging markets, right? Because there's always a lot of cash-based businesses, but it wasn't that common in the US, at least when you started Camino. I mean, it's probably your Mexican roots give you that an edge in this approach. And I connect that with the fact that people say, hey, I mean, building a fintech in the US is very different to Latin America. And I'm sure there's a lot of differences in terms of infrastructure, services, etc. But at least on this regard, it sounds that it may be more similar than we thought, at least for the more, let's say, underserved market segments. I wonder if there are any other ideas of how financial services are done in emerging markets that you brought to Camino.
It's so funny because you're touching on a theme that I'm very passionate about in general. There is a lot of increasing cross pollination in data sets, methodology between countries, right? And I actually think one of the biggest cross pollination opportunities, so I'm kind of teasing a little bit where my head's at, data sets, economies, workforce, like you name it, living is between US, Canada, and Mexico. And so I think this is one of many different examples with real structural considerations, right? That I think create a huge insights and cost advantage that ultimately translate to driving better value to the customer. And so this was, I think, at probably the most basic level, a relatively simple strategy that we just applied from Mexico into the US, right? But I actually think there are a lot of more structurally oriented strategies and nuances to building companies today that really create an unfair advantage when given the cross pollination between these three great countries. And of course, globalization has existed. It's cutting across a lot, but I actually think with, for instance, I think it does a better job in these three countries versus like there's a lot of VCs that are like, okay, I'm gonna do a regional play. Brazil and then Mexico, or Mexico and Brazil. It's like, dude, they're very different markets, very different markets. Like they're geographically very far from one another, different languages, different regulation. It's very interesting. I'm applying a more of a strategic mindset
Mm-hmm,
on
mm-hmm.
how you do that in the context of the themes that I'm thinking about for the future. But I couldn't agree with you more. Like the cross pollination opportunity and strategy and structural benefits that can come from within are very exciting to me personally. And
don't leave us with a curiosity. Share probably one or two of these ideas or use cases that you are thinking about.
so I think there are multiple, but I think that here are a few. I mean, let's pick one that's super basic, right? Which is tourism, right? And I think that in the context of tourism, there are a lot of even non-Latinos, Americans, and Canadians that want to spend more time in Mexico for a variety of different reasons, right? But renting or buying in Mexico is tricky for any American or a Canadian, right? Opportunity, right? Let me give you another example. One that we actually did at Camino Financial. Offshore development is not new, right? Especially in engineering. But we think that, for instance, working with people within a 2 to 3 hour time difference is actually a big operating consideration, right? There's a lot of great technical talent in Mexico, great universities, but not just in engineering, across multiple disciplines, right? Marketing, credit underwriting, servicing, and so forth. And so at Camino Financial, we peaked at 169 employees, of which I believe over 130 were in Mexico. Our client was only in the United States, right? So just give you an example of the benefits of different verticals, and that comes to the benefit of both Mexico and the United States, because yes, we're able to, in this scenario, bring down our cost base and access talent, because it's hard to access talent, right, anywhere in this world, and we just found an edge to being able to get that talent in Mexico, but then use that as an opportunity to deliver value back to the Latino in the US.
Mm-hmm, mm-hmm, mm-hmm.
Realize the opportunity.
I know, I mean, you obviously have an investor hat. You previously worked in private equity. I know you're part of a angel group, in a sense, or angel syndicate with your buddies from Harvard. I wonder if there are, and I think through that you've invested in Latin America, or at least see some Latin American startups. I wonder, because usually people think about, let's build the X for Latin America, right? Let's bring Uber to Latin America. Let's bring all the models that have been proven in the US to Latin America. I wonder if you see opportunities to do the opposite, especially when talking about like a segment like Latino business owners. Like, because it sounds like a lot of what you did through Camino had already been built, or at least tried in a sense, in Mexico, in Brazil, in Colombia, because of the nature, the emerging nature of the economy.
Yeah, so I think the source of the model and the strategy, I'll be honest, I probably don't pay as much attention to.
Okay.
I do know there's a lot of people that say if it works in the US, it has to work in LATAM.
Which isn't always true.
Yeah, not always true. And to be honest, even when we applied the surrogate income strategy, it was just more probably a nature of the origin of where many of our clients were from,
Okay.
and just kind of like, what are best practices of underwriting for this client base? And so we naturally took strategies from LATAM to our emerging markets, generally defined, to do that. But that happened fairly organically. I haven't really put more thought into the sort other opportunities that we can migrate from LATAM, Mexico into the United States. I'm sure there are. I mean, look, the best case study is food. Right? Right? Food is a great case study, right? Like bringing flavors and smells and taste from our, from countries where our roots are from, and into the United States. So I think there's a lot of importability of opportunity in the US, especially with a thriving US Latino market that now, for instance, in our case, there was the assimilation generation, and now we're actually the Latinidad generation. We want to become more Latino and tied to our roots, and which, by the way, back to the cross-pollination opportunity, especially given the higher cost of living in the US, right? Latinos and non-Latinos alike are seeing Mexico as a second home, right? And I think that in and of itself is pretty exciting.
Yeah, and I think if you add nearshoring to that, I think the bonds between the US, Mexico, and probably some parts of Latin America are just going to get stronger in the next years. Not only because of, migration, but also because of economic activity. So that's an exciting time. I want to get back to a bit more technical lessons from your journey at Camino. And something that you did probably very uniquely is that you established a very strong brand among the Latino business owners, largely for organic marketing. However, that wasn't the case in the beginning. I mean, I know you guys have a huge blog with a very, very big SEO authority, but that takes time, right? And there's people that say it takes years, or people say it takes months. But besides that, initially you basically had no brand and you had to build trust and acquire your first customers in a segment which, as you've said before, usually isn't that trustful, right? With great products. So I wonder, how did you manage to do that in the early days when you were trying out like the MVPs or the first products of Camino?
I think this is kind of anchoring on a founding principle of hire people that know more than you, and so we actually worked with Hamlet Azarian, who now runs his own agency. And one, he helped us evaluate the opportunity or missed opportunity on Spanish SEO. In terms of key business terms, in Spanish SEO, we're probably top game in town. And in the United States, as you think about organic strategy as another principle, it's really making sure that you do a good job in building good content. Like keep it basic, like content that's actually helpful, that's relevant. That's probably where the long tail investment of time is, right? You can't hack content. I've heard this time and time again. Like there's a lot of hackers, right? And I think people that you want to be coming on your website and converting into leads don't want hacked up content. They want quality content. Be patient because it takes time. You said it yourself. Specialize in an audience that you're creating that relevant content for. I think specialization is very important, and we were able to do that. That became one of our growth pillars that we still are reaping the benefits today.
Speaking of the early days at Camino, how did you acquire those customers? Because at that point you still didn't have that authority on SEO.
Thank you for keeping me honest. All right. So you're like, assuming SEO took time, how did you get your first? Okay,
Exactly.
I got what you're saying. Oh, that's easy. So it was easy, but not obvious. So remember, I talked about the insight that this market wouldn't be touched digitally, right? And building a digital first, digital only brand. But when I talk about that, I'm not just saying like, yeah, set up ad campaigns on Facebook and Google to acquire that client. No, I'm talking about transact with them exclusively online, all the way down to getting sensitive information such as bank transaction data through a very secure network plaid, right? But that to a first generation Spanish speaking Latino with maybe a high school background, it seems very intimidating and scary, right? And so I think we built basically a user experience that was counterintuitive at the time, which was an edge and an insight. And so we were able to cut through any kind of noise in being, right in front of our prospective clients when we needed to be. And so that enabled us to acquire them at a relatively lower CAC compared to our incumbents.
In what way was it counterintuitive?
The point around this market is and continues to be perceived as one that will only transact with you offline. Around 50%. It's like 50-50 now. It's probably 20-70 when 20-80 when I started, but like 20% online, 80 offline. So we were still kind of going through a niche entry point, right? That was still 20% of the market, but we weren't going after 80%. But we also kind of positioned ourselves in a place where the trend was, right? And so that moved towards, I think it's like 50-50 people that go online versus offline nowadays. But point is also offline is still relevant, especially for this segment.
Since you're serving micro businesses, I mean, the average loan size that you were offering to these businesses was considerably much smaller than the typical lending fintechs or providers. And this basically translates into the fact that your CAC has to be, I mean, the ceiling of your CAC is substantially lower as well, not only the loan size. So I'm curious how this, I mean, when you in those first early days, let's say when you've built a financial model, you're trying to pitch the vision and the business you're going to build with Camino. How does this CAC limitation influence your decision making during the early stages of validating the business? Like, are there any specific decisions that come to mind?
Yeah, so unit economics are huge. Given my finance background, we were very disciplined on figuring out unit economics early. I think there's a lot of entrepreneurs that don't, and they should. Obviously, I get pitched at all the time,
especially lending
on unit economics. I'm like, come on, how's that possible? How are you going to make money? And so the short answer is the average loan size of $15,000 to $19,000, right? It's small, but not that small. I actually think it's a lot harder to make money with loans below $2,000. And I really sympathize with the lenders that are, that are even like bound by more regulation, lending at less than 2,000. That's just a function of, okay, the short answer is this is probably what people won't tell you. The unit economics don't work until you subscale, until you're at scale and they start working. And you need to put in $200 million of equity into that business in order for it to go from subscale to scale and reach exit velocity, right? Like, and so it's a really big, expensive bet. And then you have to kind of, evaluate whether that bet is worth the potential outcome in terms of multiple valuation. And I think what a lot of venture capitalists have realized is that in certain areas, and this is not a Latino thing, this is a balance sheet investing thing, just to make sure it's very clear, that is a very hard bet to make. So actually, in a way, we got into small business lending because, in cognizant of unit economics, we actually thought the unit economics made a lot more sense earlier on at subscale. And so that's not to say our business doesn't live and die by CAC. And look, the qualifying, like, what's the funnel look like to, make sure you're responsibly putting money out and getting money back and making everyone happy. That's probably where the trick was, right? And that's a function of underwriting, capital markets, risk tolerance, etc. But the point is like, it was, on paper the unit economics makes sense. I was less concerned with that. Now, how much does that scale to? What are the saturation levels in which you're starting to hit that CAC ceiling relative to the qualified market opportunity? And do you need to scale above that, right? That's where I think, strategic decisions needed to be made in order for us to think about, okay, we have a solid Latino strategy that's defensible, but does this scale, to $1 billion opportunity? And look, the short answer is on a standalone basis, we realized the answer was no. I mean, once again, back to like controversial points, but I'm just going to tell you how it is so people know this, right? Is we had a great Latino strategy with a Latino first orientation that helped us build a really solid foundational business. But was it worth $1 billion on a standalone basis? I think that's not a bet that I was willing to make. And so comfortably, we were very strategic about merging the company with a solid strategy. Because once again, if there's a takeaway, is you should question whether it makes sense to have a Latino first, Latino only orientation in your business, right? But you should always have a Latino strategy. Always. If you don't have a Latino strategy, you're not going to grow. Yeah, you're not going to grow efficiently, right? And so that's the balance that I'm saying. And so ultimately, that really triggered us to be thoughtful about merging with another company. And now I think, Camino Financial Fundation is going to be the top 3 SMB lender in the next 5 to 7 years. And that was because we were pragmatic in our thinking. And I continue to think that the Camino part of the business will be a great driver of that growth, given the Latino strategy.
I appreciate the honest and transparency to your thinking and these key decisions that you've made at Camino. Just to wrap up all these lessons around the lending and fintech as a business, the truth is it's a very competitive space. So I'm curious about what are the, let's call them, competitive frontiers for Camino. Like, what are those 2 or 3 main dimensions that you thought were key for Camino to win in order to become a successful business?
Number one, you have to be good at credit. If you're not good at credit in a credit business, and that's underwriting, pricing, and managing credit, you don't have a business. I think that's very important. And so that was a key part of our ability to be successful and get to the scale that we were. I think there's still a lot of I'm excited about what comes next, because I think that scaling that model into other markets is something that is going to be very exciting and prompt the company to do a lot, become just bigger at scaling the company. So I'm really excited about that. I think the second one, I think, is building a brand that wraps around a specific market with great content. I think that, which translates into lower customer acquisition costs. Okay. I think that it ultimately gives you an edge. So one gives you an edge on managing risk and pricing. The other one gives you an edge on attracting the prospective client at a lower cost relative to anyone else, right? And so kind of then the math, you can see
The unit
the unit
economics.
economics.
Mhm.
I think the third thing, and this is what Fundation contributes to the Camino Foundation merger, is I do think you have to have a B2B strategy. Something we did. You asked me a question. What would I do differently if I had to start a company again? I would have thought through the B2B strategy a lot early, maybe even first. Maybe even first. But because I was focused on the Latino orientation, it made sense to build a direct to market strategy. If you're a fintech and you don't have a B2B strategy, I don't know. Because you're right, it is crowded. And if you have real like structural benefits and advantages that you've kind of figured out, right? By the way, there's actually a value prop in offering good content to B2B partners as well, by the way. They actually value the principle capital in isolation is not the solution, right? They actually do.
They prefer more
And
broccoli.
yeah, it's like, hey, you can give them some broccoli because we're working together to make this customer base healthier and better and grow so we all can prosper as a community, right? And so I think so those were the first two that we got right. And the third one we kind of basically merged to get it and accelerate. It was always part of our strategy, but it was late in execution of our strategy that I think will once again make the combined entity a top three non-bank SMB lender in the US in the next 5 to 7 years.
Why is the B2B strategy so key for a fintech in your eyes?
Yeah, so it's back to customer acquisition costs. So the reality is that by nature, going to direct to market structurally doesn't scale to a certain point. You're actually going to hit saturation levels at some point. Now, what point you do? And let me be very clear. Like when I made the bet on Camino, I would have never taken venture capital money if I didn't think the opportunity was to be $1 billion company, right? And with the Latino market itself, and I think over time, over maybe 15 years, right? Yes, but typically a venture capital investors time frame is five to 10, right? So, but the point is calibrating it back to what I was saying. Going direct to market is structurally inefficient, right? Especially if it's performance ad campaigns. Yes, if you have an organic strategy, but there's costs associated with organic strategy. So that's a fair exception to the rule on the content driven strategy. But just generally speaking, branding is expensive. And you need to put more money into the engine, and you're competing with some now big incumbents that have massive budgets that are getting smarter on their Latino strategy, for instance. And so I think one way to create a structural advantage over incumbents, where you can be more specialized, is by offering that B2B strategy, which effectively translates to lower CAC. And I think the scalability of that channel is really great. It doesn't necessarily translate into direct to market strategies, but it can, and has proven the test of time with B2B strategies.
That's super interesting. I was talking last week to Angel Sagun. He's the founder of Albo, one of the largest neobanks in Mexico. They're very focused on lower mid class and base of the pyramid. And he was telling me that the biggest mover in economics, I mean, basically in the profitability of his business, was getting into B2B. The flywheel that it creates between having B2C and B2B and being able to do that B2B2C strategy, it's been a total game changer for his own business, both in terms of growth and profitability at the same time.
100% emphasis on profitability, because at the end of the day, if you're not growing profitably, then it's hard, right? And then what I would say though is, one thing I like about what he said is the B2B2C strategy, very important. But when you acquire the client through a business partner, it's branding the experience. I think like the perfect balance, in fact, if you ask me, is like, hey, at scale. I want to build a business that 80% of the business is generated through my business partnerships. But I still think, even if the profitability and economics aren't as excited, I want 20% of my business to be driven off of the a direct to market. And here's why: building a relationship directly with your market is actually creates a flywheel effect in how you better service your business relationships. And so sometimes here's what ends up happening if you're 100% B2B, it becomes a transactional relationship. That's what happens. and it becomes incredibly transactional and the loyalty isn't there. I've seen it before. Like, first question you should ask a B2B only player is, okay, tell me about customer attrition, tell me about renewal rates, tell me about, and you're going to see when you benchmark those metrics relative to direct to market. So it's not all roses in B2B. There is a beautiful balance between the two. I think people should take advantage of.
And what's fascinating is that I think this is true not only for fintech, but I've also seen this relationship between the B2B and B2C business models and those synergies happen in our industries like education, health. So I think there's some probably universal business truth around combining those two strategies, which is very interesting to dig deeper into. But we won't go that way because we're about to come up to time. So I have a couple of last closing questions. The first one is, what has been the largest failure during your time at Camino, and what major lessons did you learn from that failure?
I never fail, but there's always opportunities for improvement. And so it's such a common one, but it's just managing people is hard. Hiring, retaining, incentivizing, managing them has been really hard. And I think, just to give you an illustrative example, there was a moment in time where we went from 50 employees to 169 employees within, I think, 12 to 18 months. And I was actively fundraising in order to support that growth and didn't have my eyes on the business as much as I would have liked to. And I think the culture changed. There are elements of the culture that changed. Not everything changed, but there are elements of the culture that changed. I mismanaged that situation, right? And that's probably my biggest kind of mistakes. I think, look, I think I learned how to manage a balance sheet, and there was a lot of very tactical issues there that I've learned from, and now make me a much better credit risk manager. Unfortunately, credit, the only way you learn is by losing money. It sucks and it's painful, but once you've lost enough money, you learn how to make it. And so I think there's an element of that too. But I wouldn't qualify that once again as a failure. It's just more, just going through the emotions and the experience of managing a balance sheet. But the people part is still to this day one that still, like, I haven't wrapped my head around. I'm still there, and most people would say I'm great to work with and manage a team really well, but I still have some insecurities around my ability to do it as well as I would like to. So yeah.
Are there any lessons around the people part or something that you plan to do different? It feels like that hyper growth stage when you go from 50 to 100, 150 employees in a year, it's, I mean, you're gonna mismanage people inevitably, right? It's like, I mean, I wonder, like, how much can you really prepare for that phase of the growth of a business? Like, is there really a lot of CEO or founder can do different?
Probably not, because here's the thing: the silver bullet solution is take your time. That's the silver bullet solution.
Yeah,
Take your time and mix up
hire
the
slower.
slower fire, higher slow, fire fast. Like, I mean, we know the
Yeah,
conventions,
yeah.
and that convention, I think, does stand the test of time, right? It's just really hard to do, and you need to be pragmatic about the situation. Don't overestimate people with a ton of experience and underestimate people with little experience. That's another one.
Okay, okay.
That's a big one for me.
I love that one. One last closing question. What's something that's currently emerging that excites you? It can be anything: an entrepreneur, a leader, a technology, an industry, a theme.
As we've alluded to, founding CEO of Camino Financial. And so after the merger, I exited the company and actively thinking about new themes. And I think there are a few things that I'm really excited about. How they crystallize, I think, is TBD, but I think there are themes that I'm very excited about. I think we're at a time, and I think I touched on all of them a little bit throughout this conversation. One is AI and tech enablement. I think gives the entrepreneur or even executive the power to scale opportunities at a lower cost than I've ever seen before. So what that means is, if you are starting a company, you can probably raise less than you otherwise would have need to raise a year ago for that company to have the potential to make at least $5 million in EBITDA per year, right? That's a big deal. Hopefully, I'm encouraging people to think about the math a little differently, because think about the math. What's in your best interest to make most money, but that's what the investor's doing. Okay, all right. Number one. Number two, I think fintech innovation is still in its early innings, and I think this is a counterintuitive point. I think, as has stood the test of time, most of that value will be realized in balance sheet, but there's less, subsidized venture funds that will go towards balance sheet, and so it's a very interesting dynamic, at least for me, where it's like I'm uniquely positioned to take advantage of that, because I think there's going to be scarcity of talent, relatively young, that can capitalize on that opportunity. So that's just, I'm selfishly saying that one because that's one that I'm excited about. And then the third one is the North America economy opportunity. I think it's a very exciting opportunity. The cross pollination opportunities between U.S., Mexico, and Canada is real, and I think that's going to create multiple opportunities for investment across so many different verticals.
I totally agree with the first one in particular. The one you spoke about around how this will push the venture model to change or evolve. Something that I'm thinking a lot about, given AI and basically the power it gives an entrepreneur, is what will be the optimal size of a startup in the future. At least for me, I feel like building, I don't know, 1,000 people company to get to $1 billion won't be necessary. That impacts, you need less funding. Then, well, you need the same amount of VC firms, the same size of VC funds, and it also allows you to tackle probably a lot of problems or products that needed much more personalization, but before were not feasible economically, and now it makes sense.
100% agree. 100% agree.
Very exciting time, and there's a lot of, I think, VCs thinking about it. There's this big company in New York that's basically investing in acquiring small businesses and trying to plug them with AI. So I think there's a lot of movement starting in this intersection between how the capital markets work for early stage companies and AI.
Yeah, couldn't agree with you more.
Sean, I love this conversation. Thanks a lot for the time, and bye. Thanks a lot once again.
It's a pleasure to be here and be a part of this community that you're building. Thank you so much for doing this, and look forward to staying in touch.
Thank you, Sean. I appreciate that. Bye.